So we're in the middle of the quarantine. The governor shut down everything except for what's considered essential businesses. And when you look at what most states consider to be essential, what's on there? You have grocery stores, pet stores. Of course, here in Kentucky, we love our bourbon, so of course the liquor stores are open. But what also is on there are financial advisors. And that's simply because we have connections to capital markets. Our clients, if they need money, have to be able to get it, and very often they get it through us. But I think that essential takes a much higher level because advisors now are going to have to prove their value to their clients because we're in this market downturn. They're going to have to counsel their clients in a way that prevents them from making some serious mistakes. So when I think back to 2008, 2009, time and time again, clients would call. Early on, they were fine. But then as it continued, they were suddenly thinking, you know what? I got to get out. I want to be conservative. In other words, they've just taken in all of the pain of watching markets go down. And so now it was time to lock in those losses so they think they can feel better. And of course, what happened? The markets came back, and did they feel better? Oh no, they felt even worse because they didn't participate in the gains. People, listen. You knew going in that if you are dealing with stocks, the stock market and mutual funds, that things are going to be volatile. That it wasn't just going to be -5 during a bad year. You knew that there was a chance or a possibility for some -40s. And you also should have known going in that historically, those declines are temporary. In fact, they rarely last that long. But as an advisor, I must be the voice of reason to my clients. I have to tell them, I wouldn't do that if I were you. And you know what? The real brave advisors will actually refuse to do things solely based on their clients' emotions. Basically, some advisors are like, I would rather you fire me than me let you do something that's going to harm you long term. Now, I'm not going to argue about what's right or what's wrong, but if you have investments spread out, asset allocated correctly, index portfolios, multiple asset classes, like the way you should, like the way we do for our clients, then you logically should know that it's going to come back eventually. Now, I don't know when, but it's going to come back. But if you let the clients give in to the pain and not finish the job, then you're not doing your job. I wouldn't be doing my job. It's not going to help them in the long term. When you think about what doctors do, doctors know that very often the treatment that they prescribe is going to be worse or more uncomfortable than the illness itself. But that eventually is going to make things better. So this is when my clients need me the most, to protect them from themselves and reassure them that the plan that we have in place took into account all these down markets, even big drops like this one. So we've already been proactive with our clients. We've called some, emailed them, met with them, we've done videos, etc. Our clients are educated and informed. But if your advisor has not reached out to you and you have questions, go to talktomarcus.com and schedule a 15-minute phone call. We'll take a look at where you are now, give you a second opinion, and if we can help, we will.